if you think about the core asset classes of, say, office and industrial, they're running really well at the moment. I think they're attractive because of the yields that they throw off relative to the cash rate and other investment opportunities. Industrial, as an example, is probably the sought after asset class at the moment, particularly the logistics area of industrial because of e-commerce. So that's very attractive. So I think you're seeing still strong demand for those types of assets. Residential is the market that's having its recalibration and movement between two cycles. So I think that's playing out quite well. I don't think there's been very strong declines. I think in markets and precincts where there's been sort of oversupply, if you like, because of the lack of new starts, that oversupply and surplus stock in those markets is being absorbed by buyers of real estate, being owner-occupiers and investors. So that's good. So that mopping up effect of that surplus supply just starts to help equalise the market and create, or absorb that supply that's existing. So that's been occurring. I think at the moment it's very hard for developers to activate a site because they can't get pre-sales, that is sales that are bought off the plan before construction starts. So that's a very tough market. What is selling in the market is completed stock, albeit at very lower levels than previously we would have sort of 12 to 24 months ago. So that's sort of direct from the project marketers who market a lot of projects. That what they're selling at the moment is that completed stock where buyers can walk in and inspect the apartment. It's finished, maybe 2 or 3 months ago, and they've actually got apartment they can live in straight away or invest in straight away, rather than waiting sort of 18 months, 2 years for an off-the-plan purchase to sort of eventuate into a completed building. Because there's no starts and people aren't buying and you're not getting developers activating, the risk is that goes on too long and you tilt the market around the wrong way. That is, you have too much demand and not enough supply, so it actually flips the other way. And then you have pressure on prices because there's just this wave of demand from investors and owner-occupiers looking for stock, and you haven't got the start. So it's really, the calibration of that is really important, how that moves forward over the next 12, 24 months. So I don't think anything's going to happen quickly in terms of new starts in the next sort of 6 to 12 months, but maybe sort of at the back end of 2020 moving into 2021, you'll have developers activating sites and starting to pre-sell, and by that time, hopefully the market's sort of equalised, and you have good demand from investors and owner-occupiers who have sat out the market for that period of time and are now ready to re-enter the market.